Warren Edward Buffett, born on August 30, 1930, in Omaha, Nebraska, grew up in a world far different from the one we know today. His father, Howard Buffett, was a stockbroker and a U.S. congressman, while his mother, Layla, was a homemaker. From a young age, Warren was surrounded by an environment that was conducive to curiosity and learning. Despite being born during the Great Depression, a period marked by financial hardship and uncertainty, Warren's story is one of perseverance, early insight, and a love for numbers. Warren's journey to becoming one of the most successful investors in the world did not begin in the high-flying world of Wall Street. It began in the small, modest house in Omaha, where his love for business and investing took root. Even as a child, Warren showed an incredible knack for numbers and an eagerness to engage in business activities, a trait that would later define his life. Warren's entrepreneurial spirit was evident as early as age 6. He recalled in interviews that one of his first business ventures involved selling chewing gum door-to-door in his neighborhood. He would buy packs of gum for 5 cents each and sell them for a penny per piece, making a small profit with each sale. Even at such a young age, Warren demonstrated the fundamentals of business: buy low, sell high. Though his early ventures were small, they laid the foundation for the business genius that would emerge in the years to come. By the time he was 11, Warren had already moved on to a more ambitious project. He bought a used pinball machine with money earned from his paper route and installed it in a local barber shop. Within months, the machine became a hit, and Warren soon found himself with a thriving small business. He and a friend managed the machine, splitting the profits. It was here that Warren learned valuable lessons in business management, understanding demand, and working with others to achieve a common goal. This experience was one of the first instances where Warren realized that a small idea, with proper execution, could turn into something profitable. Warren attended Rose Hill Elementary School in Omaha, where he was not necessarily the standout student, but his love for numbers was apparent even in his schoolwork. He once said that he was not a particularly great student, but he always had an enthusiasm for business and the stock market. He would often read the newspapers and follow stock prices, and it was clear to his family that Warren's mind was always working in ways that were different from most of his peers. Despite not being a standout student, Warren's early school life provided him with the foundation for his future success. The lessons he learned, both inside and outside the classroom, would shape his mindset as he continued to grow. His early experiences in business and the natural curiosity he had for learning became key drivers in his later success as an investor. As Warren entered his teenage years, his fascination with the world of finance and investing only deepened. He began to read extensively about successful investors and businessmen. One of the earliest influences on him was a book titled 1,000 Ways to Make $1,000 by Napoleon Hill. It was a collection of stories about people who had found ways to make money, and reading it fueled Warren's drive to understand the principles of wealth building. Warren's passion for the stock market became so strong that he would spend hours poring over the stock pages of the local newspaper. One of his early investments came at the age of 11, when he bought 3 shares of Citi's Service Preferred for $38 per share. Although the stock initially dropped to $27 per share, Warren held on to it, and when it eventually rose back up to $40 per share, he sold it for a small profit. This first taste of investing left a lasting impression on him, as he learned the importance of patience in the market, and how holding on to an investment for the long term could yield positive returns. However, even more important than the financial lesson was the emotional lesson Warren learned from that first investment: the value of holding on to an asset during difficult times. This would become a cornerstone of his investing philosophy in the future, as he often preached the value of patience and long-term thinking. By the time he was 13, Warren had started another business, this time, selling door-to-door magazines. His ability to persuade people to buy subscriptions was impressive for his age, and it further demonstrated his growing skill in sales and business. He also continued to explore his love for numbers by calculating how much money he could make if he sold a certain number of subscriptions. It wasn't just about earning a profit, it was about understanding the numbers behind every transaction and honing his analytical abilities. During this time, Warren's father also played a significant role in shaping his financial mindset. Howard Buffett, Warren's father, had always been a practical and grounded individual. He would often engage Warren in conversations about the stock market, economics, and business. These discussions helped Warren develop a deeper understanding of how the world worked, and it was clear that he was learning from someone with vast knowledge and experience. Warren's school life during this period continued to revolve around his academic interests, but it was clear that his true passions lay elsewhere. Although he was not particularly interested in the traditional high school curriculum, he was deeply invested in understanding the principles of business. He would often read books about successful investors like Benjamin Graham, who would later become one of Warren's biggest influences. At 14, Warren had saved up enough money to buy his first car, a 1949 Chevrolet, for $350. Instead of spending his earnings on typical teenage pursuits, Warren took pride in the fact that he had earned enough through his business ventures and investments to afford something that was seen as a symbol of independence. Warren's early interest in investing was not only driven by the desire to make money but also by a deep intellectual curiosity. He was determined to learn everything he could about the world of business. His interest in finance continued to grow throughout his teenage years, and he began to look for ways to formalize his education in the field. When it came time to apply for college, Warren initially considered attending the University of Pennsylvania's prestigious Wharton School of Business. However, after a discussion with his father, he decided to attend the University of Nebraska at Lincoln instead. He felt that attending a larger, more well-known school might not allow him the personal attention he needed to truly excel in his studies. Instead, he chose the University of Nebraska because it was closer to home, and he believed that he could make a bigger impact in a smaller environment. This decision, while unconventional, would turn out to be an important one, as it allowed him to pursue his passion for business in a more individualized way. Warren was accepted to the University of Nebraska, where he enrolled as an undergraduate student in the College of Business Administration. It was at the University of Nebraska that he began to dive deeper into the world of investing and finance. He continued to read widely, devouring books on stock market analysis, investment strategies, and business philosophy. He also took full advantage of the opportunities to network with professors and other students who shared his interests. Despite being highly focused on his studies, Warren still maintained his entrepreneurial spirit. He continued to invest in the stock market, and his ability to identify undervalued stocks and make smart decisions continued to grow. He was already a budding investor with a clear vision of what he wanted to achieve in life, but his academic experiences would serve as a critical foundation for the future. Warren Buffett's time at the University of Nebraska marked the beginning of a significant transformation in his thinking and approach to investing. Though he had already gained practical experience through his early ventures and investments, it was during college that Warren began to formally study the theories and principles that would guide him throughout his career. After completing his undergraduate studies at the University of Nebraska, Warren knew that he wanted to take his understanding of business and investing to the next level. With this goal in mind, he applied to the prestigious Columbia Business School, where one of the greatest minds in investing, Benjamin Graham, taught. Graham was known as the father of value investing, a philosophy that emphasizes buying securities that appear underpriced based on fundamental analysis. It was Graham's influence that would change the trajectory of Warren's life. Warren had read Graham's book The Intelligent Investor before applying to Columbia, and it left a lasting impression on him. He was so captivated by Graham's ideas that he immediately knew he wanted to study under him. He applied to Columbia, was accepted, and moved to New York City to begin his graduate studies. At Columbia, Warren had the unique privilege of learning directly from Benjamin Graham, whose teachings about value investing would shape his investment philosophy for years to come. Warren quickly became one of Graham's most enthusiastic and diligent students, absorbing every lesson with a level of intensity and focus that would serve him well in the years to come. Graham taught Warren the importance of looking at a company's intrinsic value rather than following market trends or speculating on short-term price movements. This approach resonated deeply with Warren, who had always been more interested in long-term value creation than in making quick profits. In one of his early classes, Warren stood out for asking insightful questions and demonstrating a deep understanding of the principles of investing. His ability to think critically and logically about business and finance made him a standout student. Graham took notice of Warren's keen intellect and work ethic and even offered him a job after graduation, an offer that would become a turning point in Warren's career. After completing his studies at Columbia in 1951, Warren Buffett returned to Omaha and briefly worked for his father in the stockbroker business. However, he soon realized that working for someone else was not the path he wanted to follow. Despite his success with small business ventures, Warren still yearned for more. He wanted to pursue his passion for investing full-time. In 1954, Warren was offered a position at Benjamin Graham's investment firm, Graham-Newman Corporation. This was a dream opportunity for Warren, as it allowed him to work alongside his idol and learn directly from one of the greatest investors of all time. At Graham-Newman, Warren honed his skills in value investing and gained invaluable experience in evaluating companies, identifying undervalued stocks, and making long-term investment decisions. However, after just 2 years of working at Graham-Newman, Warren decided to strike out on his own. While he had immense respect for Graham and had learned a great deal during his time there, Warren felt that he could create his own investment strategy and philosophy. He believed that he could achieve even greater success by applying the principles he had learned from Graham in his own way. Warren's decision to leave Graham's firm was not an easy one, but it marked the beginning of his independent journey as an investor. With the support of his family and a small amount of capital, Warren started the Buffett Partnership, a private investment partnership that would eventually become the foundation of his future empire. In 1956, at the age of 26, Warren Buffett established the Buffett Partnership. He began the venture with just 7 investors, including his family and close friends, and invested their money using the value investing principles he had learned from Graham. Warren's strategy was simple but effective: invest in undervalued companies with strong fundamentals, hold them for the long term, and avoid the speculative nature of the stock market. The Buffett Partnership quickly gained traction, as Warren's investing style began to produce impressive returns. Over the next few years, he grew the partnership from 7 investors to dozens, and his reputation as a shrewd investor began to spread. Warren's approach to investing was different from the conventional wisdom of the time, and he gained the trust of his investors through his discipline, consistency, and deep knowledge of the market. One of the keys to Warren's success during this period was his ability to spot opportunities where others saw risk. He focused on finding companies that were undervalued but had strong management teams, solid financials, and the potential for long-term growth. While others were chasing the latest trends and speculative investments, Warren remained focused on finding intrinsic value in companies that others had overlooked. By 1962, Warren had already begun to make a name for himself, and his partnership had grown significantly. His investment philosophy was paying off, and he was earning returns that far outpaced the market. This success laid the groundwork for what would eventually become Berkshire Hathaway, the company that would make Warren Buffett one of the wealthiest individuals in the world. In 1962, Warren Buffett made a fateful investment in a textile manufacturing company called Berkshire Hathaway. The company was struggling at the time, and its stock was trading at a low price. Warren saw an opportunity to buy shares in the company at a discount, believing that the market had undervalued its true worth. However, instead of just buying the stock and holding it, Warren began to take a more hands-on approach to the company. He gradually increased his stake in Berkshire Hathaway and eventually took control of the company in 1965. At the time, Berkshire Hathaway was a struggling textile company, but Warren had a vision for its future. He knew that he could transform the company into something much greater by applying his value investing principles and investing in businesses that had strong long-term potential. Warren's decision to take control of Berkshire Hathaway marked a turning point in his career. He would eventually turn the company into one of the most successful investment vehicles in the world, and it would become the foundation of his vast fortune. When Warren Buffett took control of Berkshire Hathaway in 1965, it was far from the global investment powerhouse it would eventually become. At the time, the company was a struggling textile manufacturer, and Warren was determined to find a way to turn it around. He saw the potential in the company's assets but knew that the textile business itself wasn't the path to the long-term growth he envisioned. Instead of continuing to focus on textiles, Warren Buffett began shifting Berkshire Hathaway's focus to investing in other businesses with strong fundamentals and promising future prospects. He began buying companies in various industries, all of which were undervalued by the market but had the potential for substantial long-term growth. One of his early acquisitions was the National Indemnity Company, a small insurance business that would play a pivotal role in funding his future investments. The decision to enter the insurance business was a turning point for Berkshire Hathaway. Insurance companies, like National Indemnity, provide a steady flow of cash from premiums, which Warren could use to fund additional investments. This strategy became a hallmark of Buffett's approach to growing Berkshire Hathaway, using the cash generated by one successful business to fund acquisitions in other industries, creating a diversified portfolio that would benefit from long-term growth. By the early 1970s, Buffett's investment style was beginning to bear fruit. Berkshire Hathaway's stock price soared, and the company's portfolio grew rapidly, with investments in a wide range of industries, including insurance, energy, railroads, and retail. Warren's ability to identify undervalued companies and his patience in holding them for the long term began to set him apart from other investors, who were more focused on short-term gains. One of the key strategies that Buffett employed during this period was buying entire businesses, not just stocks. While many investors were content to buy shares in companies and trade them on the market, Warren focused on acquiring companies outright. He believed that buying entire businesses would give him greater control over their operations and allow him to unlock their true potential. This approach would pay off in a big way as Berkshire Hathaway grew its holdings in a variety of industries. As the 1970s unfolded, Warren Buffett's reputation as a brilliant investor continued to grow. By the end of the decade, Berkshire Hathaway had amassed a portfolio of investments that included a wide range of industries, and the company's stock price had increased significantly. The 1980s were a period of rapid expansion for Berkshire Hathaway, as Warren Buffett's unique approach to investing gained wider recognition. Buffett's investments during this time included some of the most iconic companies in the world, including Coca-Cola, American Express, and Gillette. These companies, which Buffett considered to be economic moats, businesses with a strong competitive advantage, were integral to his strategy of buying companies with durable competitive advantages and holding them for the long term. One of the most significant moves during this period was Buffett's investment in Coca-Cola. In 1988, Buffett purchased a significant stake in the company, seeing it as a brand with a strong global presence and a consistent track record of profitability. At the time, the company's stock was undervalued, and Warren believed that the brand's strong moat would continue to generate long-term value for shareholders. Buffett's investment in Coca-Cola turned out to be one of the most successful in his career, as the stock price skyrocketed over the following decades. Buffett's success with Coca-Cola became emblematic of his investment philosophy: find companies with a strong brand, a durable competitive advantage, and the ability to generate consistent profits over the long term. His strategy was focused on identifying companies that were undervalued by the market but had the potential for substantial growth, and he had an uncanny ability to pick such winners time and time again. By the mid-1990s, Berkshire Hathaway had transformed from a struggling textile company into a global conglomerate with interests in a wide variety of industries. Warren Buffett had built an empire, and his name had become synonymous with value investing, long-term thinking, and unparalleled success in the world of finance. One of the most important aspects of Warren Buffett's success has been his commitment to long-term investing. Buffett has always been clear about his philosophy. He seeks to buy companies that he believes will continue to thrive and grow over the long term, not companies that will provide quick, short-term profits. This strategy has earned him a reputation as a patient, disciplined investor, one who is willing to hold on to his investments for decades if necessary. Warren Buffett's commitment to long-term investing is also reflected in his approach to risk management. Rather than focusing on short-term market fluctuations or trying to time the market, Buffett takes a long-term view of the businesses he invests in. He looks for companies with strong management teams, a proven track record of success, and a solid business model. He also emphasizes the importance of buying companies at reasonable prices, avoiding the temptation to overpay for an investment, no matter how promising it may seem. Buffett's philosophy of long-term investing has been the key to his success over the decades. While other investors may be focused on short-term market trends and speculative bets, Warren Buffett has remained focused on the fundamentals of business and the long-term potential of his investments. This discipline has allowed him to generate returns that have far outpaced the market, and it has made him one of the wealthiest individuals in the world. As Warren Buffett's wealth grew, so did his commitment to philanthropy. In 2006, Buffett made a historic announcement that he would be giving away the majority of his fortune to charity. He pledged to donate his wealth to causes that were important to him, including public health, education, and poverty alleviation. The bulk of his charitable contributions would be directed toward the Bill and Melinda Gates Foundation, an organization dedicated to improving global health and reducing poverty. Buffett's decision to give away his fortune was not just about giving money, it was about making a difference in the world. Throughout his life, Warren had always believed that wealth should be used for the betterment of society, and his philanthropic efforts reflect that belief. He has said that the greatest joy he gets from his wealth is knowing that it can be used to improve the lives of others. In addition to his financial contributions, Buffett's philanthropic philosophy has inspired many other wealthy individuals to give away a significant portion of their wealth. The Giving Pledge, which Buffett co-founded with Bill Gates, encourages billionaires to pledge at least half of their wealth to charitable causes during their lifetimes or in their wills. This initiative has led to billions of dollars being donated to philanthropic causes around the world. As Warren Buffett's wealth and success continued to grow, he maintained a reputation for humility, frugality, and integrity, which set him apart from many other billionaires. Despite his immense wealth and global influence, Buffett remained grounded and lived a relatively simple life. His modest lifestyle and personal habits have become part of the legend that surrounds him. Buffett is known for still living in the same house he purchased in 1958 for $31,500, a modest home by the standards of the world's wealthiest individuals. He drives a relatively simple car, enjoys a regular breakfast at a local fast food restaurant, and is rarely seen indulging in lavish displays of wealth. His unpretentious lifestyle has earned him the respect of both investors and everyday people, who admire his ability to accumulate vast wealth without losing his sense of humility. Buffett has also been steadfast in his commitment to ethical business practices. Throughout his career, he has emphasized the importance of honesty, integrity, and transparency in business dealings. He has been vocal about the importance of corporate governance and the need for companies to treat their shareholders and employees with fairness and respect. This commitment to ethical practices has been a cornerstone of his success, and it has inspired countless individuals in the business world to prioritize honesty and responsibility in their own careers. Throughout his career, Warren Buffett has shared his investing principles with the world, offering invaluable insights into how to achieve success in the stock market. His annual letters to shareholders, which he has written for decades, have become legendary in the world of finance. In these letters, Buffett offers advice on everything from company valuation to the importance of long-term thinking and the need for investors to be patient. One of Buffett's most famous principles is his approach to risk. He often states that risk comes from not knowing what you're doing. This emphasizes the importance of knowledge, preparation, and due diligence in investing. Rather than taking speculative risks or making impulsive decisions, Buffett encourages investors to take the time to understand the businesses they invest in and to approach the market with a long-term mindset. He advises that investors should only invest in companies that they can understand, which is a philosophy that has guided his own investing decisions. Another key lesson from Buffett's philosophy is his emphasis on the importance of a strong competitive advantage. He has repeatedly spoken about the importance of investing in companies that have what he calls an economic moat, a competitive advantage that protects them from competition and allows them to generate consistent profits over time. This principle has been a guiding force in his investments in companies like Coca-Cola, American Express, and Gillette, all of which have strong, recognizable brands and market positions that set them apart from competitors. Warren Buffett has also been a vocal advocate for simplicity in investing. He believes that investors should focus on what they know and avoid complicated strategies or speculative investments. Rather than trying to chase after the next big trend or technology, Buffett suggests that investors focus on buying high-quality companies at fair prices and holding onto them for the long term. He has often advised against trying to time the market or make quick trades, encouraging people to adopt a patient, long-term approach to investing. One of the most profound pieces of investment advice Buffett has shared is his famous quote, "Our favorite holding period is forever." This reflects his belief in the power of compounding and the value of staying invested in high-quality companies for the long haul. Buffett's ability to take a long-term view has helped him avoid the pitfalls of market speculation and emotional decision-making, allowing him to achieve remarkable success over decades. Warren Buffett's influence extends far beyond the world of investing. His life story has inspired millions of people around the world, from aspiring investors to business leaders to ordinary individuals seeking to better their financial situations. He is widely regarded as one of the most successful and respected investors of all time, and his investment philosophy has become a blueprint for long-term wealth building. But beyond his financial success, Buffett has had a profound impact on how people view wealth and success. He is often quoted as saying, "Success is about doing what you love and being good at it," and his career serves as a testament to this belief. Buffett's story proves that with hard work, dedication, and a commitment to lifelong learning, anyone can achieve extraordinary success, regardless of their background or circumstances. Buffett's influence on the business world is also immense. As the chairman and CEO of Berkshire Hathaway, he has built one of the largest and most successful companies in the world. His approach to management, focused on giving executives autonomy, empowering employees, and maintaining a strong corporate culture, has been widely admired by other CEOs and business leaders. Buffett's ability to acquire and manage a diverse range of businesses has set a new standard for corporate growth, and his leadership style has been studied and emulated by many in the corporate world. As Warren Buffett's wealth grew, so did his commitment to giving back. In 2006, he made a landmark pledge to give away 99% of his fortune to charity, with the majority of his donations directed to the Bill and Melinda Gates Foundation. This decision marked a major shift in the world of philanthropy, as Buffett's generosity and commitment to societal causes inspired other billionaires to do the same. The Giving Pledge, which Buffett co-founded with Bill and Melinda Gates, encourages billionaires to donate at least half of their wealth to charitable causes. Since its creation, the Giving Pledge has attracted some of the wealthiest individuals in the world, including Mark Zuckerberg, Elon Musk, and Larry Ellison, all of whom have pledged to donate the majority of their fortunes to charity. Buffett's philanthropy is guided by his belief that wealth should be used to improve the lives of others. He has consistently emphasized that those with significant wealth have a moral responsibility to help address some of the world's most pressing issues, such as poverty, disease, and education. Through his charitable giving, Buffett has made a profound impact on global health, education, and social justice, helping to improve the lives of millions of people around the world. As Warren Buffett nears the later stages of his life, his legacy is already firmly cemented. His career has spanned decades, and throughout it all, he has remained true to his principles of long-term thinking, disciplined investing, humility, and giving back. His ability to remain grounded despite his immense wealth, his commitment to ethical business practices, and his focus on long-term value creation have made him a role model for generations of investors and business leaders. Warren Buffett's life story is not just one of financial success, it is a story of perseverance, passion, and a commitment to making a positive impact on the world. From his humble beginnings in Omaha to his rise as one of the wealthiest individuals in the world, Warren Buffett has shown that true success is about more than just wealth. It is about living a life of purpose, helping others, and making a lasting difference. Warren Buffett's journey is far from over, but his impact on the world will continue to be felt for generations to come. His life and career provide countless lessons for those seeking to make their mark in the world of business and investing. Perhaps the most important lesson that Warren Buffett has imparted is that success comes not from taking shortcuts or chasing quick wins, but from doing the right thing, sticking to your principles, and remaining patient and focused on the long term. As Buffett himself has often said, the best investment you can make is in yourself. This mindset has been the cornerstone of his success, and it serves as a reminder to all of us that the key to achieving greatness lies not in external circumstances, but in the choices we make, the mindset we adopt, and the actions we take in pursuit of our goals.